All right, hello Matt. How are you? Good to see you this week.
Good to see you too. I guess the fun doesn't stop, does it?
No, no. Just so everyone knows, bear with us here. We're experimenting a little bit this week for the first time, trying to do our Twitter Spaces live at the same time as our YouTube live stream. I think it's going well. I think we figured it out. Um, and so we have people on YouTube live watching us and people on Twitter listening to us at the same time. And as always, this will be recorded and on our YouTube channel as soon as it's over. So yeah, quite a week of Tesla this past week, right, man? I mean, for the macro market in general, we'll talk about in a second, but just real quick, I mean, and Tesla has been insane, right? I mean, today it's kind of taking a breather. There's been so much, I mean, down $50 as we talk right now, but it's been yo-yoing back and forth between 11.50 and 12.10 all morning so far. I mean, what are you thinking about this price action right now, man?
Yeah, I mean, it definitely caught me off guard. Oh man, so Tesla has been obviously pretty impressive. I think we talked a little bit about last time how we had these 900 calls, and we kind of thought there was a decent chance we would see a pretty big run up after the Q3 earnings were announced. That happened, but I think it happened much more vigorously than you or I would have expected, Emmett. I think I wasn't entirely surprised to see it kind of cross 1,000 because we did think there was a decent chance that could happen. But just the way that it like blew through there and then, ran up to 1,200. And then, last night after hours just kept on going after 1,200. That did surprise me. It definitely caught me off guard. But at the same time, looking at, what Tesla's business is going to be like 5-10 years from now, I think I'm still a buyer at these levels. I don't know what's going to happen in the short term, but in the long term, it does still feel, like there's a ways to go. But what's your thought on what we've seen so far?
I think what's interesting is that the rest of the market today is the Nasdaq is up a lot today to new record highs, and Tesla is kind of going down. It's like going the opposite. I mean, yesterday I think a lot of the movement was opposite. Like it wasn't the Nasdaq and the market sort of flat, and it kind of stayed buoyed up by Tesla almost by itself, like from being up
Yeah,
8%. If
yeah,
Tesla didn't
Tesla
go
was
up
up
8%,
8%. It was just
yeah, and
crazy.
that's like one of the biggest components of the S&P 500 and the Nasdaq. And if it wasn't up 8%, I think those indexes would have been down probably like 1% or something. It's just, and so there was tremendous buying yesterday and the day before, and Friday, and I think it's a combination of like a gamma squeeze by retail investors uh, buying short dated options, and the market makers having to delta hedge their positions as the price keeps going up. And then you have some institutional portfolio managers over time sort of just buying more into Tesla over time. The ones that were hesitant in the past, they saw this earnings print and the gross margins, and they're starting to come around finally. Because Tesla's a hard company to figure out. We've said many times
Yeah,
it's not simple. Like when you're a portfolio manager and you have a basket of 50 stocks in your fund, I mean, you can't spend so much time just on Tesla. You can only spend so much time. You have to, you just have to depend on other people's research, and then you end up listening to skeptics, and you just have uncertainty. So you decide not to get any piece of it. Instead, that's the safer thing, you think. And then finally it's coming around. You start realizing I have to get a piece of Tesla. And so you just, you start buying in. And so I think there's a number of these types of institutional money managers and portfolio managers that are now, you know, forcing their hand to kind of get a piece of Tesla, or they're going to they're realizing they're going to miss out on the biggest potential investing story of our time. I mean, they already missed out at least on a huge run up to date, but it just becomes the biggest company in the world and they haven't had a piece of it. That looks really bad on them in their careers, I would say.
yeah, I think you're right. There's been a lot of talk about the gamma squeeze, and I do think that's probably playing into this a little bit. But to me, it seems like there's there's more than just kind of heavy volume of options, and I think institutional portfolio managers, especially considering kind of the credit rating increase that just happened recently, that makes it kind of easier to invest in, for a lot of those fund managers who don't necessarily have that conviction in Tesla, like you were saying, because they can't do that research. But all of a sudden you see, Tesla, which is a huge component of, whatever benchmark index these portfolio managers get indexed against. And so they've got one of the biggest return components of the S&P 500 or whatever their benchmark index might be. is missing from their own portfolio. And so now they're saying, hey, I don't want to, take alpha risk by not having this company. So I'm going to kind of, eliminate that by going equal weight to the S&P 500. So they, add however many tens of thousands of shares, and you can kind of amplify that across however many other institutional portfolio managers may be doing that. The more those buyers, kind of buy in, creates pressure amplified by the gamma squeeze, and then kind of the delta between the benchmark index that these portfolio managers get paid on and, a portfolio of a similar index, but which is underweight or zero weight Tesla, it would just amplify it even more. So I do think there's a little bit of a cycle there of some index managers adding and this whole gamma squeeze, but it's not clear exactly what's driving this, and we don't know what's going to happen. What's your, do you have a kind of thought on probabilities of where we may go from here, or what the end of the year looks like?
Yeah. So yeah, for the probability for the rest of this year, I mean, Tesla feels like it got really unhinged. It needs to settle somewhere. Does it continue upward trajectory in the next few days to $1,500 or beyond, or are we in the beginning of a correction right now, back down towards like $1,000 or $900 again? It's hard to say. I mean, nothing would surprise me. The options are, I was looking at some of our options. We have some long-term options in our fund for Tesla, some long-term call options that we bought a while, months ago, luckily. And the implied volatility on those is going up. Like I was looking this morning when Tesla was down like 20 or 30 bucks. Then those options, even though they're out of the money, I think they're like 1,400 calls or something for January 2023 or something. They were up like our P&L was positive, a couple percent or 1% on those options, even though the stock was down 2 or 3%. It was crazy because I think the implied volatility on all the Tesla options has gone up tremendously after the move this morning, where it's like whipsawed back and forth. I mean, so options are getting very expensive, and rightly so. I mean, the market makers, hopefully they're learning their lesson with Tesla options, right?
Yeah, I mean, I think they got burned the last couple of weeks. I'm sure it's been a very costly couple of weeks when they have to, delta hedge and they continue to add, and then even that hedging amount that they've been doing has not been enough. I mean, I was just looking at options expiring.
I mean, the Black-Scholes formula, we talk about they all use the Black-Scholes or binomial version of the Black-Scholes formula or whatever. And, a formula is one thing, but when you're talking about like such a disruptive stock like Tesla, I have a hard time believing that it's like a really accurate, maybe in a perfect world, if you could delta hedge with infinite liquidity or something in real time, then you could still do it. But I just feel like with the gapping up and the gapping down, and the market maker's not able to find enough liquidity to delta hedge the amount of options people are buying, I just feel like it's very imperfect, the Black-Scholes and binomial pricing models for trying to price options on Tesla. It just seems there's a big gap there.
Yeah, I completely agree with you. And I think the biggest issue, the biggest single variable I have with that model, which we love to take advantage of, frankly, so I'm not upset about it, but the volatility input into that pricing model is really just adjusted kind of as the trailing however many period days, whatever that movement looks like. So you've got kind of a backward looking volatility model, which if you're playing leaps can be like incredibly inappropriate. If I was a market maker on a company like Tesla, where like in 2019 when I started getting into some of the options plays, I couldn't believe the pricing. It's essentially some of the options, assuming that Tesla could 2x, were priced at under $1. And I just thought that was incredibly insane.
That's insane.
And so like the same thing happened this year, right? Where, you had crazy volatility early in this year, then it kind of settled out in the spring and summer. And I think that's when we bought some of those 1,400 calls that you mentioned. And then now, like, of course, the price has gone up, but the implied volatility has spiked back up again. So, if you can kind of do a good job of buying the lows on implied volatility, there's a decent chance that even if the underlying asset doesn't appreciate in value, just a change in volatility can result in a huge change in option value. So I do think it's really an imperfect methodology, especially for a transformative, disruptive company like Tesla. But
Yeah.
it applies to others
Yeah.
as well.
Yeah. I mean, I think the imperfection, I think in theory it could be perfect, but with the limited liquidity out there on Tesla stock, the spread can be a couple dollars wide at times, and
Mhm.
at this prices, and there's not many share, like there's like an illusion of liquidity with high frequency trading. It's more of an illusion of liquidity versus when market makers existed. High frequency traders are not really market makers. They're not required to post two-sided quotes. Before high
Mhm.
frequency trading came about, there was real market makers that were registered in a certain way, and they had to put two-sided quotes on at all times. But now that there's high frequency trading, it's more of an illusion, I'd call it, because if things start moving fast, then you see these ghost bids or ghost offers out there to kind of, there's a lot of funny business that goes on, and that's allowed, with a lot of the exchange and ECN rules and so forth. It's just high frequency traders have gamed the system, as much as possible to trick people in different ways it results in a disillusionment of liquidity when the market's moving fast. Like when you watch Tesla go up really fast this morning after it kind of went down it went up so fast, and I don't think there's a lot of liquidity there. There's like a huge vacuum, when it goes from like 1150 to 1200 again. Like if it comes back up, someone could buy a relatively small amount of shares, maybe, I don't know what, if it's 100,000 or 500,000 shares, but in the past, buying that many shares when the stock's been stable, it might be hard to move the stock more than like 1% or 2%. But now you can move it like 5 or 6 or 7%, I feel like, in a matter of minutes, really easily,
Yeah.
if someone comes into a big buyer or a big seller, just because there's just no market, the liquidity is not there for the market makers who have to delta hedge themselves.
Yeah, and I think the other thing that we've seen in the last couple of years in particular, which might just be accelerating, is I think you've got kind of an increasing percentage of shareholders who are long term and who just are not selling. So Elon obviously has a good chunk of the shares locked up. Some of the other insiders do as well. There were kind of a handful of retail investors that were just kind of convinced that they were going to hold it for until 2030 or beyond. But then aside from that, you had a good percentage of the overall float, which was highly liquid and, kind of available to trade. But the first kind of big change that you've talked about a lot was, S&P 500 inclusion. I mean, that locked up a good amount of shares that are frankly never going to be, kind of back on the market again. I mean, it's almost like a share buyback in a sense. And then, now I think if you have more and more institutions that are, doing this, not because they're required to, but because they don't want to accept the alpha risk of not having, shares that the benchmark that they're priced against. I think it's kind of highly unlikely that a lot of these new institutional owners will be sellers, just because they don't want to take that risk. So I think you've got, all these kind of market situations kind of all coming to a fruition at the same time, and you don't have as many open shares kind of available to, whereas people a year ago would have been happy to kind of sell on the way up. I think there's just fewer sellers on the way up right now. So it'll kind of amplify movements and kind of lead to potentially a re-rating, and we'll see where this shakes out. I don't know where we'll be 3 months from now, but I think the volatility will probably die down by then, but I don't know at what level.
Yeah. And Elon, I mean, he seems a little unnerved by this Tesla stock price movement so quickly. I mean, he retweeted last night something about like, I hope this isn't all because of the Hertz news. There's no contract signed yet. He seems a little, unsettled. I tweeted out to him. I said something like, "Are you feeling split right now about the stock price?" Hoping he might like it or give some hidden signal that a split's coming. That's something we should talk about in a second. But he didn't react. But maybe I should have put a cool looking meme in there too. And he seems more reactive to the memes picture or something. So, but he does seem a little unsettled. Like I don't know if he honestly thinks like that the stock prices move in conjunction with news items like that necessarily. Like the media reports it that way, but you and I know that's a lot of noise. That the stock's
Yeah.
moving for a number of reasons. It's hard to always just connect, correlate, and the Hertz news, that's long gone. I mean, that was good. That was a good like feather in the cap. It was a nice news item to talk about, but that's not why the stock's moving. Like maybe it contributes a tiny bit to it, but if Elon really thinks that, he shouldn't be an investor in stocks. He's much better off being an entrepreneur. And a lot of brilliant people I find have a tough time. My old boss at Interactive Brokers, brilliant guy in the business, but I feel like picking stocks or trying to predict stock movements is a whole different animal that is so I don't know if he really believes that Tesla stock is connected to the Hertz news, but I think if he does or doesn't, either way, he seems a little disembodied or a little uneasy with the stock going up so fast so quickly. What do you think, Matt?
Yeah, I mean, I can imagine sitting where he is. He's not trying to sell right now, so he doesn't particularly care what his paper wealth grows to, but it does potentially create issues for him. I mean, you can imagine there's probably more and more Tesla millionaires that actually work at Tesla. So I mean, if you start losing employees just because they say, hey, listen, like, I believe in the company mission, but I don't want to work these crazy hours anymore when I can sell my shares and do just fine for myself. So that can create like a kind of an operational issue for him. And then you've got kind of the potential of, if you're bringing on new employees and they get, that stock-based compensation as well. I don't know, maybe, you have potentially some disparity between people on how much stock they're getting based on randomized factors, like, which 6-month period were you hired into. So I could imagine if I were in his shoes, I would much prefer kind of like a slow and gradual buildup to
rise.
alleviate some of those issues.
Yeah, for sure.
But
yeah, because he saw the stock. I mean, for example, 2014 to 2019, when the stock kind of stayed range bound so long, I think he probably witnessed a lot of the employees not getting rewarded the way he thought they probably should have been able to get rewarded. And such as the business was growing and doing so well, the morale of the employees would have been better if they were kind of being rewarded financially with their stock options kind of in a more stepped manner each year versus kind of not being rewarded much for 5 years unless they stuck with it for 5+ years until 2019. So yeah, it's very erratic, the stock movement, and that's just, you can't control the stock movements. So Elon can, to some degree, like, he can throw cold water on it from time to time with a tweet or something on purpose, but I think that ability of his is being diluted over time as the market cap and it becomes more evident that Tesla is going to become the largest company in the world.
Yeah, I mean, like, even you saw him joking about the Texas Institute of Technology and Science or something like that, and that was the sort of thing that a couple of years ago the stock would tank on, Elon being unprofessional, for making jokes like that, and it seems like he's not able to kind of like self-destruct the stock down the way that it
or even calling President Biden a puppet, like calling the president of the United States a puppet of the UAW. Like, how is that
puppet?
3 years ago it would have been like, oh, the SEC is going to investigate Elon, for threatening U.S. democracy, or I don't know. They'd come up with some crazy like headlines for Elon calling the president of the United States a name, but he just called out President Biden like he's a UAW puppet, like on Twitter, and his 60 million plus Twitter followers, and the media doesn't blink an eye at that, and it's so crazy. Like he's.
Well, I think anybody who's been watching, it's like it's very transparent what the administration is doing at this point.
It's impossible to ignore.
So it's like, I think even if you want to criticize him for tone or something like that, it's not like his comments have no substance, right? Like, Biden was just thanking the UAW for electing him to the Senate 180 years ago, which was its own kind of hilarious. Like, is he not? I couldn't tell if that was a joke or just a slip. I'm not really sure.
I don't know. I think he's being serious. I think he's very frustrated. I mean, that's something where, on our list of things to talk about, like his growing animosity towards the current administration. like, I feel like it's been a steady growing animosity Elon's had towards the Biden administration. It first started with like, oh, it's strange that we weren't invited to this, or it's strange this, he never called me. Now it's like Biden is a puppet, like he's calling him out, and I think he's getting frustrated, and he's throwing out this like cryptic, what was that, Chinese poem, or was that a Chinese poem or a Japanese poem? I don't know, about the
It was
beans.
Chinese. Yeah.
Yeah. Sorry, I don't recognize the characters, or I didn't study it, but
Japanese is more curly. It's all right.
okay, yeah, I'm sure. Yeah, I'm sure. So, but that was cryptic. That was interesting. Like, does that mean that is that like a metaphor or allegory for what he feels like he's being undermined right now? Tesla's being undermined. Like, he has more information than we do, obviously, on everything involved in his business, right? So, if there is some kind of like underlying risks about to come into place, it makes me a little worried that maybe he's seen grumblings from regulators contacting him already about like a recall of all the software or something, or if there was some kind of like back channel going on where it's like, yeah, we're going to have to make you recall all the full self-driving vision only software until you get lidar or something. Like, who knows, there could be some ridiculous like legislation passed nationally, and he's getting early word of it, and it's frustrating the heck out of him, and maybe he's throwing this stuff out there as kind of like, as a response. That's, in my paranoid mind, what I can envision. He could just be overly getting annoyed for not having enough sleep or something. I don't know, but it seems like there's something more to his frustration that maybe we don't see. What do you think, man?
Yeah, I don't know if I read into it necessarily in the same way that you did, but
Okay.
either way, I do think that it's clear he's becoming incredibly fed up with just kind of how political this situation has become. I mean, he responded to that tweet I had about like how politicized and kind of anti-Tesla the Missy Cummings appointment to NHTSA was. And so you've just got this streak of kind of continuing, like there was the no invite, there's this EV tax credit favoritism for unions, there's Biden actually like explicitly thanking the unions, there's Missy Cummings, there's these ongoing NHTSA probes which seem like to be completely unwarranted, with requesting recalls for OTA updates, but like it doesn't make any sense. So
Yeah.
I mean, I'm frustrated.
And then you throw in like
as a shareholder. Yeah.
The articles about like, oh, Elon can donate 1% of his net worth to solve world hunger, or 3% of his net worth to solve world hunger. Like calling him out like for not solving world hunger and stuff. basically implying that, and all this stuff is like it's like everyone wants to gang up on the bad guy. It's crazy. On the rich
like
guy, the guy who's
it's not even the bad.
Yeah.
Trying to think about like who's done more for humanity than Elon Musk. It's like I really struggle to think of anybody right now. But like that doesn't matter. It's like there's this kind of worldview that look, he's got over $200 billion now, so like that's just too much for anybody to have, so we should take some of it. And like it doesn't really matter what we do with it, because the point is just he's got too much, so let's bring him down a peg. And then like, okay, well, like even if you could, like Elon was talking about, like donate $8 billion to solve world hunger, if you show me how to do that, I'll do it. Like so it's got to be incredibly frustrating.
And he's forcing I like how he really is forcing the sunlight on it, the transparency, open sourceness, and saying, I want you to post it on Twitter for everyone to review, because the guy's like, yeah, call me offline, we'll talk about, that's what these people want to do. I dealt with that in like, slippery, snaky people a lot of times in sales, where it's like, hey, just email me what you want, the questions you have. I don't want to call you and be stuck on a call with you where you can just tell other people that you talked to me about this and I have no proof. Email me, put it in writing so I can see, we can review it later, and no one can say he said, she said ever again. And that way it's clear and there's transparency. Same kind of thing with what Elon's doing, is saying, put it in writing, put it on Twitter so everyone can review it. Let's all look at it. I think that's really smart, and it definitely calls them out, I think, in a lot of ways. Like this guy from the World Health Organization, the UN or whatever, he might actually truly believe it himself. Like, oh, 6 billion. Someone might have sold him something on a phone call. Like, yeah, if Elon donated 6 billion, we could do it. But now he has to figure out how to put something in writing, like in, where the money would go exactly to do this thing they're claiming, and now he's got to kind of back down, and after he figures it out, like he's going to go to his people who told him that, and then they're going to be like, go to their people maybe who told him, and it'll, go back and forth like a game of telephone until they figure out, oh, we're not even close on our claim. Elon, it's already
Yeah.
like we can't solve world hunger. It's already misreported, but we can do a lot, and now he's not even going into detail on that.
Yeah, I mean, I think that gets into there's this general sense, I think, of a lot of people that you can solve any problem with enough money. But I think
Yeah.
like Elon has had so much experience, and if you look at like the space program, for example, or like the defense, like look at the Afghanistan war. I mean, how many billions of dollars were kind of poured into
Yeah.
like the space shuttle and all these kind of ambitious projects. And they worked kind of, like you could show
Yeah.
something for your money, but it's
Yeah.
completely unsustainable, and it
Yeah.
didn't do anything to kind of drive technology and lead to sustainable solutions. And Elon is
Yeah.
clearly so much more interested in what are sustainable ways we can make change.
Yeah.
And so I think that's it's good for everyone to kind of keep in mind. And I do hope that, folks at the UN and anyone who's in charge of kind of allocating, these multi-billion-dollar budgets, I hope they take this seriously and say, okay, how can we be more aware of? Ooh, did I lose you?
No, I'm here.
Oh, sorry, my computer completely froze there. How
That's
can we
right.
be more like aware of the responsibility that we have in kind of allocating this capital in a way that's going to do the most good?
Yeah.
So that's a really important question. It's one obviously Elon talks about. It's one that I think you and I feel the responsibility with, kind of the charitable component of good soil. You don't want to just like, you could donate to anything and like have a good PR story, but you want it to actually be impactful and lead to kind of sustainable changes, have the most bang for your buck as possible.
Absolutely.
And that's not going to happen in government spending, unfortunately.
Unfortunately, not. No. Yeah, I mean, I follow this economist who seems to be spot on a lot in this stuff. Is Thomas Sowell. I don't know if you heard of him, but
I
he's
don't know him
fascinating.
actually.
I've listened to a lot of his
SOLE, is that
interviews. What's that?
SOLE? Is that how you spell the name?
Sowell.
Oh,
Yeah.
Sowell. Okay.
Yeah, famous guy. I mean, he's definitely conservative. But he gives a lot of really smart. I've listened to a lot of his interviews, and he just seems the way he looks at the world is like noise free. That's the way I would describe it. Like he sees signal more than noise when it comes to politics and economics, more than like anyone else almost. And I've listened to his more recent book. It's long. I mean, I like listening to it to help me go to sleep because it's like dry, but it's like interesting. It helps me fall asleep in a way. But it's really interesting. I like watching his interviews and so. I mean, but he understands this stuff. It's just fascinating if anyone wants a good economist to kind of check out. I think he was taught by Milton Friedman. Although when he was taught by Milton Friedman, he was actually a socialist himself. So he was early on a socialist and then converted to become a capitalist, and when he started working for the government, funny enough, he saw the inefficiencies in person up front and realized he's on the wrong side of things, the way he looks at the world and anyway. But moving on to the next topic, I guess, is like the metaverse. Facebook's renaming themselves. We'll get to Q&A. I'm sure people have a lot of questions about Tesla. We'll go over too, but let's just briefly touch on this one. The Roblox. We just had a great interview with a Bloomberg analyst, Matthew Canterbaum. Am I saying it right? Anyone who hasn't seen it, check out our YouTube channel. We just published it this weekend. He's super smart guy. He's been studying Roblox and the gaming space and metaverse for 8+ years as a Bloomberg intelligence analyst. He's like, their top guy on that. And now he's focused on Asia and the development over there. So he had a lot of good insights on what this thing we're all calling the metaverse basically is not. Like, that's a better way to define it. I think he described as like, let's define what the metaverse is not. And then you can kind of start figuring out what it is by saying what it's not, And so we went over a lot of that in the interview. It was really fascinating. But what was your main takeaway from chatting with him? We talked about Epic Games, Roblox, Minecraft, Tencent, what's going on in Asia. What was your takeaway?
Yeah, I mean, it was a super interesting conversation. Yeah, I definitely would encourage anyone who hasn't watched it yet to watch it, because he has just a wealth of knowledge on this and all the different players. I think what stuck out to me so much was just all the different kind of ways that it's going to grow. So, I kind of had in my own head that, there's going to be like an oligopoly of sorts where there's going to be like maybe two or three kind of main winners. But when he started kind of slicing and dicing the differences between like, the Chinese market and the US market, and like the differences in kind of like educational use cases versus professional use cases versus gaming, I think that kind of changed my thinking a little bit to think, all right, there may be more winners than I had initially thought. So it kind of got me thinking a little bit more that there'll be more of kind of an all boats rising sort of scenario at work. Obviously, there will be some relative winners and losers within the space.
Yeah.
But I think that helped me to kind of refine my own thinking a little bit. Just that it's not going to be like Google and Facebook like it
Yeah.
is right
Yeah.
now. It's going to be
Yeah.
probably more than just 2 or 3 main players that end up winning.
Yeah. He
But
had a good like
what
shopping
was
mall analogy he used, for example, right? Where you
yeah.
have different players within the metaverse, like a shopping mall. You have the Macy's, which is maybe like the Facebook. Then you have like the Foot Locker, which is maybe like the Roblox. You have different outlets within the mall. That's the metaverse in a way, right?
Yeah, exactly. And so, you'll go to the same mall, but you'll visit different stores within there, and you'll have your kind of
Yeah.
digital presence that can
You have the
kind of
pop-up stores in the
transverse
middle.
to
I forget what he said those were. The pop-up stores in the middle were like, I forget what referred to that as, but he had a lot of good
yeah.
analogies with that.
Yeah, he had an amazing way with analogies, but
Yeah.
yeah, so I got a ton out of it,
I even
and
asked him like
definitely
what the Unreal Engine was, because I've heard people throw around the Unreal Engine as a big advantage. He went into that detail. It was a really good chat. The other big takeaway in terms of Roblox, though, because we did spend quite a bit of time talking about Roblox, picking his brain on that, since that's a big name of ours in our portfolio and such, and was that he said that he thought probably one of the biggest things Roblox has going for it is the events, the live
Mhm.
concerts and stuff like that they're getting into. Like he really thinks that's a huge booming industry kind of about to erupt. I mean, and I know Matt, you think you kind of believe in that as like a nice call option on the Roblox business model too. I mean, I mean, I've always thought of it as like a nice add-on, but I didn't think of it as like such a big deal until he kind of really emphasized it.
Yeah, I mean, it kind of makes sense to me that, like if you like, we know there's a whole concert industry, and people make millions of dollars doing that whole thing, but you can do it,
Hmm.
more cost effectively online, and you can do it with a million attendees or more at an event like that. And so if the platform's getting, just some small sliver of, whatever sales or whatever economic activity occurs, in that venue,
Hmm.
it's a massive opportunity to think about. So yeah, that I had been kind of thinking of that as a call option. Listening to the management team talk about it, to be frank, I think they've downplayed it a little bit, probably
Yeah.
intentionally. Just to, they're clearly working on it, but I think they don't want to get expectations up too high. But it got me really excited that I think this is going to become a much bigger part of the business, 2-3 years from now, and especially 5 years from now. And so I'm just excited to see how that kind of transforms the business.
Yeah, absolutely. Yeah. So, yeah, we'll see what happens. I mean, Roblox was down for the weekend for like 3 days straight almost, or 2.5 days. We were watching it closely because we are like, oh, I hope they fix this by Monday, or the stock could really take a hit Monday if it's been down for like 3 or 4 days and they can't figure it out. But it came up Sunday afternoon, pretty much at the same time. That coincided with my kids. They get like scheduled like 1 or 2 hours a day on weekends of playing on their iPad, doing different games they can pick. But immediately they went to Roblox, and immediately they were like so excited that it was back up, and they were like, I want to spend all my allowance on it. And they like immediately spent all their allowance on Robux. And, you know, normally they kind of, stage it over the week or over a few weeks or whatever, but they hadn't been able to play it the day before or Friday afternoon. They typically get an hour or something, and so they really missed it. It was like they
Yeah,
all weekend they thought they weren't going to, so it was interesting to bounce back.
they're
And I
like
was like,
junkies. They hit it even harder when they came back.
yeah, yeah, exactly. And I even saw the R Track Live Twitter handle we follow, which kind of gives some interesting updates on. But now already it's back up to active users that it was the same active users rate it was last week. So interesting little miniature case study here, where Roblox goes down for like 2 or 3 days straight, then it just bounces right back to where it was, and maybe in another week we'll see it trends up a little bit faster, even based. We'll see. I mean, I'm curious if it goes up even faster. Like you take away something, and it makes people want it more, maybe, or maybe not.
Yeah,
Maybe it just
I was
goes
kind of
back.
surprised. I mean, it was down for so long on Friday during trading hours, but it was still up, yeah, 1.5%, something like that.
The
So the
stock was
market
up. Yeah,
didn't
it didn't really affect the
seem
stock.
to take
Mm.
it too seriously, which was good to see.
Yeah, I mean, I think an
Because I
outage for like 6 or 12 hours is like totally acceptable. And like, so Friday,
mm,
it was like out, people, the market probably didn't expect anything. It was going to be out that long. But yeah, as it went, stayed out all of Saturday and then into Sunday, it was like, if it was during the week, the stock would start taking a hit, I think, for sure.
yeah, yeah.
So, yeah, I mean, I think let's just start going to question and answers for the next 20 minutes or so, and take as many as we can for the next. We spend about 5 minutes trying to set this up. So let's go to maybe 10:35 Pacific time. First question here from Nick E. I personally think Tesla is one of the safest plays going into next year with tapering inflation fears. Your thoughts? I do think it's safe from like a quote unquote growth stock perspective. I think what would be safer is obviously the value stocks, whether it's like, GE or like Honeywell or, stuff like Caterpillar or whatever, like some of these value plays that aren't, those stocks are probably safer, when rates go back up, in terms of staying stable, maybe even going up like they did earlier this year, I think, when this sort of happened. But in terms of the growth stock arena, I think Tesla's not the same as all the other growth stocks people are buying into, where there's a lot of momentum, and it probably has some protection. I mean, it's just come up like 50% in the last like 2 months. So, I mean, it could certainly correct back down half of that, I would say easily. But in terms of going down like 50% or something, like, while the other growth stocks could certainly go down that much if there's a major interest rate hike in rates, but I don't see Tesla dropping significantly like that. What do you think, Matt?
Yeah, I agree. I think you need to look at these things relatively. So yeah, obviously, probably like more safe value, boring stocks. If there was some huge inflation, kind of concerns, I think you see a lot of sector rotation out of tech, out of growth, and into some of those safer names, which have earnings and cash flow more kind of on the front end of the present value forecast, as opposed to
Mm-hmm.
Tesla's kind of like the middle, where it's generating a lot of cash flow right now, but even at this valuation, at the PE where it's trading right now, there's a lot of growth expectations still built into the valuation. So Tesla would take a hit, I think, but probably not as much as like a real kind of growth company. Like the example I talk about sometimes is Lemonade, because that's they're still in kind of growing phase where they're not cash flow positive yet. They've got kind of a lot of work to do to scale up. So there'll be a range, but yeah, Tesla would be more safe than other names that you'd probably want to be invested in the first place, because probably a lot of folks that are listening to this don't really have a lot of interest in investing in Caterpillar or John Deere or something like that.
Yeah. Although I hear John Deere's got some interesting technology they're working on. Well, I think ARK Investment likes them a lot, for example. So anyway, something to
Yeah,
study
they've
going
got them in the
forward.
space fund, which I can't figure out for the life of me. No Rocket Lab, but you got Netflix and John Deere in the
Yeah.
ARK-X
Yeah.
space fund.
Yeah.
Trying to figure that one out.
They're just waiting until SpaceX Starlink goes public, then they'll put 10% in there, I guess. Maybe more if they're allowed in that one. I don't know. All right, next question. Let's see. Nikki, do you think another question from Nick is, do you think the international opposition over the EV tax credit will seal the deal on removing the union proposition? International opposition over the EV tax credit.
Yeah.
I'm not sure what
So
that
I've
means.
I've heard a little bit of that. Like I don't know exactly which automakers, but like BMW and Toyota and frankly the countries that those companies work in are saying, hey, we've got an unfair advantage because like all the Asian car makers, for example, that have their workforce in the South, they're non-union shops. So their vehicles are essentially being discriminated against, just like Tesla's.
Mm.
So I forget exactly how they were putting pressure, whether it was the countries or whether it was the companies themselves that were kind of raising this issue. But it is like it's important to keep in mind that Tesla is not the only company being discriminated against. It's really just Ford, GM, and Stellantis, Chrysler, which have the union jobs, and then every other automaker that sells an EV in the country, including a lot of the startups, frankly, are being discriminated against. So yeah, I don't know if that's going to be the one thing necessarily that will seal the deal, so to speak. But I think you're kind of seeing mounting pressure from a lot of different sides. People are saying people see this for what it is. I mean, it's like favoritism for a supporter of the Democrats. And it's
but there's nothing people can do about it. Like, unless there's no vote going on right now that's threatening, Democrats from, maybe if it was during the actual election, it could be like a voting issue at the time. But all the politicians know this will be long forgotten next time there's an election. People aren't going to. I don't know. I agree. It's at this moment they can push it through if they want, if they get that support, they can just push it through.
Yeah, it's just if they think they can pass it, they'll definitely pass it. So it's just a question of does Manchin and some of the other kind of moderate Democrats, do they accept this? And I don't know. It's hard to say where it'll end up. But in my mind, it's not that big of a deal. Like it's annoying, probably more than anything.
There's so many annoying things with government spending. This is just another one of them, right? I mean, it's par for the course with the government, unfortunately. This type of stuff.
Yeah.
Next question from Silly Stuff. At current prices, which are better value, Rocket Lab 15 leaps or Rocket Lab warrants? Oh, that's a tough one. I mean, we've talked about Rocket Lab, and we're very bullish on it. It's hard to really predict where it's going to go, medium or long term. I mean, we think long term it'll be higher, but like in the next few months or next year or two, it could not. We're not sure. So leaps are a little risky, obviously, as they should be, and warrants you think are extended out to 2026 or 27, but they're a very different animal that Matt and I admit we don't have expertise in. We haven't really gotten fully invested in warrants before, like we have in our fund that we've talked about now, but they're issued by the company, not the exchange, and the company can recall the warrants at any time. So there's they work differently. So we don't, we can't really answer this question, unfortunately, with a good answer. I mean, the stock is the safest versus trying to do options and warrants. Depends how risky you want to be. I don't know. Do you have anything to add, Matt?
Yeah, I mean, like the warrants are inherently dilutive, so you kind of have to keep that in mind. Like a deep in the money leap will kind of move with the delta close to 1.
Yeah.
But the warrants never will, because they're dilutive. So if the stock moves up $1 and the warrants haven't been called yet, they're gonna move at kind of like the fully diluted amount. So you have to keep that in mind. Personally, I still even with that quote unquote risk, I do prefer the warrants, mostly just due to the duration. It's unclear. Rocket Lab is still kind of in that story stock phase where they're so small relative to their revenues are so small relative to the current valuation, that people are really valuing them based on their position within the growing space industry. So it's they could go flat or do nothing or potentially go down a little bit over the next 2-3 years. So I kind of like the longer duration of being able to go out to 2026, and just kind of let the story play out for a little bit longer. So that's my thought on that. But yeah, to Emmett's point, I agree with you that the stock is certainly the safest thing. But maybe as the story starts to unfold over the next couple of years, the leaps will look more attractive. But we'll just see.
Yeah. From Justin Matos, expecting good short-term movement on Rocket Lab over end-of-year catalysts such as earnings, possible electron, heli catch, neutron deep dive announcement. Yeah, you know what? We're going to have a discussion, a roundtable discussion with a couple kind of more experts on the space industry, rockets, satellites, and launches and such, and orbital services in next week, I think. Yeah, and so we'll post that on our channel. I think it should be good. We'll go over a lot of this stuff with Rocket Lab specifically versus SpaceX. Personally, I think Matt and I are bullish on Rocket Lab for the reasons we state in our research report online on our website. Catalysts, hard to predict, right? Like they have a launch scheduled, I think, next week, the launch window opening up, and just because they do a launch doesn't mean the stock goes up. Maybe in the past, or maybe sometimes it does, but other times it doesn't. Sometimes it could be a sell the news event even. If the rocket launch goes up and it blows up, then that's almost certainly a bad thing for the stock, though. In contrast, and the Electron heli catch, I think they're just doing a dry run of it this time. That's their attempt, is not to actually catch it, but they're just going to have some helicopters up there to kind of simulate if they were to catch it. If I recall, I thought I listened to one of Peter Beck's chats recently about that, and that's like the first step to next time they would catch it. Maybe I could be wrong on that, but the Neutron, I think, announcement will be, good news long term for Rocket Lab investors. Whether that moves the stock right then and there or not, it's hard to say. You have any other thoughts, Matt?
Yeah, I mean, kind of like we were just saying, I wouldn't put a lot of weight into end of year catalyst because it's, in my mind, a lot different from Tesla, where you've got announcements or like the Q3 earnings. We kind of anticipated a run up because the multiples had to go up. The 2022 earnings estimates for analysts had to go up based on what we were seeing. So we were more bullish on short term there, but I don't think with the stage of life that Rocket Lab is in, you're going to have those same sorts of catalysts tied to company fundamentals necessarily. So I wouldn't try to play short term movements too much on this one, honestly.
Yeah. From Brian Machado, do you think Q4 sales are at risk because of the tax credit? Will people hold off on their delivery if they know they get a tax credit in January? I do think that's a bit of risk, to be honest, in the US, that I think there will be some buyers that won't qualify, obviously, for the tax credit, either if they have an income of over, 200 or 400,000. But that, there's going to be a ton of buyers who would qualify that would prefer to hold off if they can. But also Tesla has a huge backlog of 6 months beyond, into middle of next year for a lot of their cars, or for a lot of the 3s and Ys. So they might start calling all those people and say, hey, we can give you delivery this month in December instead of June of next year if you want it, and so they have a lot of backlog to kind of tap into. It's a lot of effort, I think, though, for Tesla to kind of shuffle that around. So maybe not. Maybe they can do it in a more automated way, and they have a big service team and sales team, I would think, to kind of help facilitate it. But it's hard to say. I mean, I think it could impact marginally their delivery numbers, to be honest. But I think they'll still produce as many cars as they can, and I think smart investors would know that that's just more, I guess, icing on the top for Q1 delivery numbers. But I don't know. What do you think, Matt?
Yeah, I mean, if their demand is big enough, then they should be able to somewhat successfully reshuffle these orders. But yeah, to your point, it's not a huge deal in my mind, since it's just like a calendar quarter timing adjustment. So I'm really not too worried about it. The other maybe just interesting anecdote is my brother's had an order for a Model 3 for, I think, since July. And he's kind of held off on taking delivery for a couple of reasons. But he actually just got a notice that his order was going to be canceled if he didn't reach out and kind of agree to take delivery pretty soon, which I'm not aware of Tesla having done that in the past. So that may be kind of a way for them to get around this problem if they can, cancel orders of kind of longstanding order holders who have not taken delivery. That may help them to kind of reshuffle and match production to demand. The other, thing that does is, it kind of locks in the lower, or gets rid of the lower price that some of those long duration kind of order holders have had. So, yeah, I'm not aware if it, like I said, if this is something new, but in my mind, that's kind of another lever that increases Tesla's flexibility to kind of match supply with demand. So I'm personally not too concerned about it.
Yeah. Speaking of the stock, Tesla stock price 1172. Are we going to be able to break this kind of 1175 resistance we've had since mid morning? I don't know. I mean, it got close to being positive on the day earlier this morning, but it's going to be interesting to see what it does the rest of today, if it kind of stays where it is or makes another run for being positive. We'll have to watch it. Probably not on our on the rest of our live stream, but it'd be cool if the next half hour, next 20 minutes, it did that. So we'll see. Next question here.
I had been watching that. We got to just keep talking and pumping it up.
What do you think about Rivian IPO? Oh, when I saw that they're going, is their IPO, is that coming next week, I think now? And their valuation's like 53 billion now, or 55 billion instead of 80 billion that they were talking about. Is that what, that's the news I
Oh,
saw this morning.
I didn't hear
Yeah.
that. I haven't been watching it super closely, but with Lucid at this $55 billion market cap, I would think Rivian should be at like 90 billion. But like by comparison, like
Yeah.
nothing matters anymore. Just it's like the craziest valuations out there.
Yeah.
Yeah, I don't know.
I mean,
I
I
hadn't heard
think,
that they lowered the price, but that's interesting.
I think they did like a 53 to 65 price. And like they were talking about yesterday on Bloomberg or CNBC about that implying like a 55 or 60 billion market cap valuation, I think. So I think, I'm not as like, stung if they're going to go public at 50 billion versus 80 billion. I mean, 50 billion still seems really high for delivering, for producing one car a day. I mean, Elon said it all, like mass production is hard. Like these companies are a long way off. Like we really don't like the valuations of Lucid or Rivian being where they are, given that they're not anywhere close to mass production, in our opinion. They're still just they're basically delivering prototypes. They're just building more prototypes one at a time, and they're trying to figure out how to do it in a mass production way. But that's the puzzle. That's the thing that's 1,000 times more difficult. That I just don't see either of those companies really succeeding in that anytime soon. Maybe never. So yeah, I mean, Rivian IPO, it's going to be fascinating to watch. I'm tempted to short it or buy puts, but I think because they're doing a traditional IPO with, book runners of Morgan Stanley, I'm sure Goldman Sachs is involved. All the major investment banks are kind of, I forget what the terms for it, but like lead book runners or whatever you call it. They all have pieces with their clients, institutional clients, giving allocations to. It's the most profitable division of these investment banks is the capital markets teams. Typically, they make a killing on this, and so they want to please their institutional clients, and their institutional clients are buying into this IPO at the 55 billion valuation. So you would, there's mechanisms in place to make sure to influence the stock to trade up based on any kind of retail demand. Initially, the stock would trade up instead of $55, let's say, it might trade up to like $60 or $70 right away and go up to $80, or I don't know, based on whatever hype is going on. And then you'd have the book runners, they'd have their mechanisms in place to, they have their own shares to kind of help stabilize the price if it comes back down towards like $55 or $60. Because the last thing they want is to IPO at $55 and the stock go down to $20 the next couple of days. Like that's not going to happen.
Yeah.
That is not going to happen. Not in an IPO, maybe in a SPAC deal, or maybe a direct listing possibly, but in an actual initial public offering deal, these investment banks, they have mechanisms in place to prevent that from happening, or their institutional clients would be so upset and stop using them for that. So, the stock's going to stabilize for a while. It's a matter of, I guess, when the lockup period ends, and maybe a few months after the IPO as well, after kind of like that stabilization mechanics kind of wear off of the investment banks, they run out of the shares or whatever. At some point, the stock's going to come back down to earth if Rivian hasn't really stepped up their deliveries, which I doubt they will in the next few months. That's kind of my long-winded explanation.
Yeah, I mean, my question though is how long will it take to get back down to earth? I mean, is it going to take 2 years of like posting, kind of mediocre to disappointing financials for that to happen?
Yeah.
If they finally get to, some high level of production, but they can only do it at like a 8% gross margin, like then does the stock really correct down? And how long do investors give them credit to kind of try to build that up? So
Yeah.
that's what makes me unsure. I just don't know what the catalyst is going to be to kind of right size the valuation in my mind.
Yeah. Yeah. I mean, when people see 1.2 trillion or 1.5 trillion market cap valuation for Tesla, and then they see Rivian and Lucid at 50 billion, I guess maybe they're like, it's worth taking a flyer on Rivian and Lucid. That's sort of the bet maybe. And maybe they don't understand that like there's almost no chance that those companies can really survive and play with Tesla,
Yeah, I mean, I would give Rivian a little bit more possibility to survive. I mean, they've got backers from Ford and more importantly, Amazon.
Yeah.
So I think they're going to have enough liquidity to kind of try as long as they need to. They'll have enough
I mean, I
capital
think
to,
they could survive, but I think they could
yeah,
survive delivering like maybe at the most 500 trucks a week or something, a couple thousand a month. I think they
hmm
get to that, and that's like the demand. That's the full, like, there's trucks are expensive. Once the Cybertruck comes out and Ford, I think the Ford F-150 electric pickup truck is going to be much better than the Rivian in a lot of ways in terms of cost and in terms of production. Like Ford knows how to mass produce things, but electric cars, they don't know how to mass produce. They're learning on the fly, but so is Rivian. But at least Ford has the experience of mass producing ICE cars. That's a completely different
yeah,
thing than an electric car, but they have some experience mass producing something versus
yeah,
Rivian just trying to learn everything from scratch. I feel like, and I don't. We'll see. We'll see. But maybe if it was like a 5 or 10 billion market cap valuation, I'd take a flyer on it. But 50
yeah.
billion, no way. Yeah. Next question. Okay. Thoughts on how Lemonade competes in auto insurance in a world of Tesla insurance and potentially other automakers vertically integrating insurance? It's interesting. I think this particular question is going to be asked on the say.com Lemonade earnings call. I saw it asked. I went to the say.com thing for Lemonade, and it was one of the top questions by someone who I follow on Twitter, actually. I can't remember the name, the Twitter handle, but it's a good question. It's sort of like, how is Lemonade and Tesla? Are they going to partner? Are they going to compete with each other? And we'll see what the Lemonade management says when they get asked that question. I think Lemonade can certainly be insurance for everything that's not a Tesla. No problem. Worst case, I don't see how that would be an advantage. And, Tesla right now is only like 1% or 2% of cars. And, it's just a couple percent. Maybe at best it grows to like 10 or 20 or 30%, but still over half the cars sold would be non-Teslas, for the foreseeable future for sure. So there's a huge market for Lemonade still. I don't think they have to necessarily compete with Tesla. If there's a partnership opportunity between Tesla and Lemonade, that would be really interesting. You have any thoughts, Matt? I don't know if that would happen
Yeah,
though.
yeah. Like I don't think the other automakers are going to want to vertically integrate into insurance. Frankly, I
I don't
mean,
either.
Tesla's doing it because they've got the data already coming in. Like they kind of had this excess resource that they weren't using, and they said, "Oh shoot, our customers are paying too much for insurance. We can solve this problem for free as long as we go for through the regulatory headache of getting all the approvals and building out a small insurance team. So not for free entirely, but like at a relatively low cost, they can kind of solve that problem just with the existing infrastructure that they had. The other companies aren't going to do that. So yeah, I think Lemonade probably competes for all the non-Tesla vehicles out there and can hopefully offer a more compelling product. But I do think maybe the bigger trend is that you're going to need, if you want to lower the insurance cost or to even just have the best actuarial data possible, you're going to need kind of in-car telemetry, and you're going to need a methodology of assessing risk for individual owners. And that's right up Lemonade's wheelhouse, is kind of assessing risk with AI in real time at low cost. So it wouldn't surprise me if they kind of somehow team up with some automaker or somebody who has access to telemetry on some of the more kind of advanced cars that have some of those sensors, to come up with a way to price it in a more compelling way.
Yeah. Yeah. Auto insurance is the biggest total addressable market for Lemonade. So it's got to keep a very close eye on how that develops, I'd say.
Yep.
From Ignorant is the name. Is there a way to invest in your fund with an IRA? Bought Rocket Lab and Rocket Lab warrants after you talked about them 2 weeks ago, and up 15%, 26%. Thanks. Yeah, and we were just talking to some investors the other day. Certainly, go to our website and there's like a contact us form. If you're interested in investing, fill that out. It's pretty simple and straightforward, and we'll come back to you. We have lots of people filling that out, so that's sort of our mechanism to figure out who's a good fit or not for investing in our fund. We'll continue talking about some of our best ideas, of stocks that we like, and so hopefully it helps people. I mean, I'm glad we were coming up with the Rocket Lab research when Rocket Lab was at like $16 or $17, and if we had done it all right away, it would have published at $16 or $17. But the Rocket Lab kept going down and went down to like $12 or $13 when we published it. So it's just fortuitous timing that we published the research near the low. I mean, it could have easily been we published it at $17 and people bought it and would be down 25%. So just be careful. I mean, don't listen to everything we say. We're just giving our ideas on things long-term on stuff. So just be careful. Make your own decisions. Obviously, we're just trying to provide one perspective on some of the stocks that we look at.
Yeah, but to be clear though, like that we did enter the position around 10, kind of pre merger with the SPAC. So, we don't always we want to do best by our own investors. So we're not always going to share in real time all of our investment ideas. So certainly kind of proceed with caution on the stuff that we do talk about on here.
Yeah. From Super Jamba on 31 on Twitter, what are currently the biggest drivers of the space industry expansion, and what could its total addressable market look like by 2025? Yeah, that's exactly what we're going to talk about in this roundtable with a gentleman who runs a really prominent space YouTube channel. It's not Tim Dodd, Everyday Astronaut. It's another space channel that we caught wind of. That's the guy running it. We'll talk about who he is and stuff, obviously, on the chat, but we're going to talk about this exact thing, the total addressable market in the next 5 years and 10 years out. And I mean, I think the industry is growing fast, and there's lots of ways it's going to grow, and lots of people want to get a piece of it. So SpaceX is one great way to do it, but there's other ways too, and so that's what we think Rocket Lab is, I guess. From Jiru Thandapani, question: your thoughts on Peloton? Millennials and Gen Z are more into fitness, and the total addressable market is growing. Peloton seems to be vertically integrated like Tesla. Yeah, I heard a lot of great things about Peloton. A lot of people I respect greatly love Peloton still, even at its current valuation, which is pretty high. I haven't looked at it recently. We had a small piece of Peloton way back and closed it out earlier this year. But I like the company. I like the brand. It's hard to say. I mean, we just don't have time to really dive into that space as much as we'd like to. We focused on the companies we've been focusing on, and as curious as I am about the fitness industry and Peloton versus how that industry is evolving, it's hard to really figure out the total addressable market in the next few years for Peloton. I mean, it depends on your beliefs on, I guess, the future and how fast we're evolving to that kind of future. I don't know, Matt, what do you think?
Yeah, I kind of agree. I mean, I think we've said before, we both really like Peloton as a customer. I think the experience is great. The content they have is really phenomenal. 2020 was obviously like the perfect year for them with so many people kind of staying home and needing kind of alternatives for the gym. So now that we're, kind of slowly creeping out of COVID, I think there's some amount of risk that you kind of see some cancellations. Yeah. I think they'll still do well, honestly. But to me, it just, with how far they've come up, their current kind of valuation multiples where they are, it's just hard for me to see them like kind of 5Xing in the near term from here. And with the fund and I think with a lot of our investments, we want to look for those, what we call upside asymmetries. And Peloton, I don't see, like, I think they could be a great investment, but I don't think they have those asymmetries that some of our other kind of investments and options plays have.
Yeah, one risk with Peloton, I would say as well, that I've thought of is that a lot of the value is the content they provide, like the relationships that I think the subscribers kind of feel like they're developing with the popular folks that are running the classes. Like my wife, for example, there's a instructor she loves. I think he's one of the most popular instructors. His name is Cody Rigsby, and I've taken a couple of his classes on the Peloton. He's cool, charismatic guy, but she's like so into his classes that I asked her, I was like, so if he switched to like another brand, like an Apple bike, would you still use Peloton? She's like, no, I'd switch to the Apple bike. So I feel like these, as much as Peloton has, I think a lot of it is the content providers within the Peloton ecosystem that are the value, so Peloton's going to start having to pay up. You're going to see some of these people, like you've seen with podcasters, Spotify drawing some like Joe Rogan, but I could see competitors, coming into the space and buying off like a couple of the top Peloton, producers and a migration of a certain loyal fan base leaving Peloton to this new, so that's one thing that I think is a little bit of a risk to Peloton, but maybe they'll figure out a good way to keep those people from leaving.
Yeah. And not to, I don't want to dwell on Peloton too much, but I do think, also their pricing is relatively high. The monthly subscriptions are high, the upfront, bike or tread purchase cost is pretty high. And I'm seeing these knockoffs, pop up all the time. So, I think there's going to be a good portion of the middle class that, will just say, hey, I want the Nordic track, version, or like the Costco version, whatever.
Yeah. Yeah.
And maybe the content's not as good, maybe the experience isn't quite as good, but some people will say, I don't care, I'll save the $15 a month on my subscription and the $300 on the bike upfront cost, and I'm happy just to be working out. So I do think there's a limit to the market they can actually capture with their current pricing. So that's to me another potential red flag, not red flag necessarily, but just a limit to the potential market they can have.
Yeah. So let's take one last question here. Let's see here. This is from Dalibor Andrew on Twitter. Any Tesla options play ideas for potential split? Yeah. I mean, the split, I think we didn't really go into details, but I think, I tweeted something out the other day, like every day we close at a higher all-time price, all-time high closing price, I feel like the chances of a split is, necessarily increases, like at some point, whether it's, $1,500 a share or $15,000 a share, there's going to be a split, somewhere in between there, or maybe somewhere between $1,200 a share and 15,000, so we can't keep going on forever without us. At some point there's going to be a split, right? So I think the chances are much higher now than they were already, versus, 3 weeks ago when the stock was $800 a share. How much of buying, like another part of this potential buying going on recently could be folks kind of anticipating an announcement of a split even. So normally the stocks kind of rally a little more after a split happens, kind of irrationally in a way, because it doesn't really, there's nothing fundamentally changing the economics. It's all just human psychology sort of rallying the stock further after a split is announced. So I think people anticipate that, and maybe there's some of the buying going on recently is kind of hopeful anticipation of a stock split. So what if this is the one time there's a stock split and it's a sell the news event? It's possible. That's what I'm saying. It's not impossible that happens too. What do you think, man?
And what do you think about? I was going to ask you about like implied volatility. I mean, we were talking about how expensive options in general have come now. So how much does that kind of impact your view on whether to kind of play a speculative, short-term position like
implied
that?
volatility is going up a lot today, especially. Yeah. So, I mean, it was already pretty high going in, but today with the movement today, it's the implied vol of all the options have gone up dramatically today versus yesterday even. So any short-term plays are very expensive right now. But rightly so. I mean, the stock's been moving $100 a day, 10% a day. So, they're expensive for a reason. And as we've talked about before, sometimes when the options feel expensive, they're, it means you shouldn't do something. Maybe you sell covered calls or you sell puts or something. But I don't know. We've talked about that too. We haven't done that, but if there's a time, if we have been on the fence of selling covered calls, maybe now's a good time to do it, because the implied vol is so high today, especially on a lot of the options. But that means you have to be ready to have your shares called away from you, or kind of be stuck in a position where you're kind of over and over trying to roll them forward for a higher strike price almost indefinitely, potentially. So it's risky. Split, idea, trying to gamble on a stock option split, which is, we could be very far away from it. Like Elon, we don't know what's going on inside his head. Is he kind of on the fringe of splitting? Is he going to talk to his board and suggest a split in the next week or two? Or is he like years away from it and determined not to do a split until more gigafactories are up online and their workforce is double what it is today? And who knows? I mean, would you have any? I mean, I put the probability at 20 to 40%, somewhere in that range. I put the probability, and my gut feeling says 20 to 40%. There could be a split announced in the next few months, whether it's in the next week or two, or 2 months away from now, or 3 months. That's the probability. But even if a split is announced, I'm not saying it's a sure thing the stock goes up. It could be a sell the news event. It could be unusual, do the opposite of what everyone sort of expects if we're all anticipating a split. What do you think, Matt?
Yeah, I agree with all that. I mean, it's with pricing the way it is. I mean, I was looking at covered calls today, and like the 1,500 calls expiring on Friday we're trading for $1 earlier today. And I'm like, that
Wow.
is so crazy. Like like the stock's going to go up like $350 or something like that. And you still have to pay $1 premium for that in a 3-day time
Yeah.
frame. So options across the board are just really expensive right now. So yeah, I can imagine if you want to play the split and say, okay, yeah, I think there's a chance Tesla can get to like, I don't know, 1,400 or 1,500 on the back of a split, and you want to go out 1 month. That's just, it's gonna be very hard to like 5x or 10x on that. I have a feeling. So even if
Mhm.
you're right on everything, it may be like you said that the stock is flat, or maybe it goes up 10%, but not 30%. So
Yeah.
you lose money on the options play, or it just doesn't return what you thought it might if you were right. So yeah,
Yeah.
I personally wouldn't be trying to do that right now with options prices the way they were. But that doesn't mean that I'm right.
Yeah. Yeah. It's very uncertain, I would say. And yeah. One other thing, someone was asking me on Twitter. I just want to get to real quick. A few people have asked. A lot of people ask. It's like the most common question I get, whether it's on LinkedIn or Twitter or whatever, DMs, is how do you get into SpaceX? I want to get into SpaceX, and they know I've gotten into it in the past, and I've talked about it on previous chats on Dave Lee's channel and such. But I just need to reiterate, like, you got to really go in through what they call these special purpose vehicle funds, SPV funds, I think. And if you go to like these providers, like I think it's called Forge or something is the name of it now. It used to be Shares Post, but they merged. There's some others out there. They're kind of like private investment firms that help you invest in private investments or non-public companies. But if you reach out to them and you get a relationship with them, you can just tell them like, hey, I'm looking for SpaceX. And every once in a while, a block of SpaceX comes available at a higher valuation with these special purpose vehicles. And you have a choice to fill out the paperwork potentially and buy a piece of it. But you're not buying like, I don't own SpaceX. I own a piece of a fund that owns SpaceX. And so that's how you get exposure. And then you pay like exorbitant fees, obviously, with these funds. It's like it's like investing in a hedge fund or something. It's like 2 and 20 or more than that a lot of times. And they're just all they're doing is just holding the SpaceX shares for people that invest in their fund. So it's expensive, but it can be done. It's just, a highly manual process. And you have to meet the criteria of Shares Post or whoever it is that you're working with. There's a few of these firms out there. So anyway, I think that we'll have to see what happens this week with Tesla the rest of the week. I mean, are we in the beginning of a correction down? Or, are we going to be talking next week with the stock price higher or low? What do you think, Matt? What's your 50-50 line or your over under on where Tesla will be a week from now when we're chatting?
Um, you know, I don't know. So I want to. If I had to guess, I would say that there's a downward correction to some amount. So
Hmm.
I would say there's. If I had to just pick one number out of the air, I'd say maybe we're at 1,075 or something like
Hey,
that.
that's what I was gonna say.
Um,
1,100. I'm gonna say 1,100 a week
yeah.
from now. Yeah,
Okay.
over under. That's my
But
over under guess.
that's your over under. Okay. All right. So we're in the same ballpark. But
Yeah,
it wouldn't surprise me if we're at like 1,300. But
yeah,
at some point, this volatility has to end, and it's been what a good 5-6 weeks now of just this kind of incredible surge.
yeah.
So it seems like we should be getting pretty close to being over with this, but I'm not sure I'd want to go super risky and like buying puts or anything like that to kind of bet on it.
Yeah, they're so expensive now. Yeah, and yeah, you just don't know. But exciting times, new all-time highs, and that's what happens. We touch new all-time highs, and we're all excited, and then we come back, we retrace 10 or 20 or 30%, and then it takes 9 months or years potentially to get back to those all-time highs again and higher. But hopefully, there will be new all-time highs in the not too distant future, and we don't have to one time for it again. So we'll see.
Yeah. Yeah. I mean, earlier this year, I put out my valuation, which was $2,900 per share on a present value basis. So
Hmm.
I'm still a buyer at these levels, honestly.
Yeah,
But
yeah,
and to be clear, that did include robo taxis. Like, so you got to kind of probability weight that somewhat.
sure.
So yeah, I mean, I think it's good. I mean, we're kind of getting back to the level or up to the levels where we thought it probably should have been all along. But anytime you go up that much that quickly, there's potential it can come down just as fast. So
Yeah,
just gotta wait and see, I think.
that's for sure. 10.4 is coming out Friday night or Saturday, and that'll be exciting. We'll see how if there's any incremental improvement. Now that you got full self-driving beta, you'll have to report back to us on that. And you know, I'll be following other people's videos, Chuck Cook and other folks' videos online too, to see kind of what changes there are in the new version.
Yeah. I was wanting to like post a video, but like I pulled my phone out to take a video, and then my car yelled at me. He's like, "Pay attention to the road." I'm like, "Oh gosh, I don't want to lose beta." I put my phone away. I don't have a GoPro set up or anything like that, so I'll
Yeah,
leave the
yeah,
videos
yeah.
to the folks who are actually really good at that, like Chuck
Yeah.
and
Do you
Chris
see
and
that
others.
Halloween video that I think Elon Musk liked a video of a Halloween, a person that posted a video of their car on Halloween, like talking to like little kid trick-or-treaters coming up to their house.
Yeah, I did see
That's
that.
hilarious. I wish I could
That
have,
was really
I should have
funny.
set that up. I should have set that up. Yeah. It was funny. Anyway.
Yeah, that was great.
All right. Well, good chatting with you, Matt. We've been going on a while. Sorry about all the confusion with the Twitter Spaces earlier, and maybe we'll try it again sometime. But yeah, we'll talk to you guys all next week, and have a good week.
Yeah, thanks everyone.